Have you ever wished you could invest in a hot startup like SpaceX or OpenAI before it goes public? You see these companies everywhere, and you just know they're going to be huge. But how do you get in on the action before the IPO? Well, today we are pulling back the curtain on the world of pre-IPO investing. It's not as impossible as you might think, but there are definitely some major things you need to know. First up, let's talk about where you even buy these shares. You're not buying them directly from the company like you would in an IPO. Instead, you're buying them from existing shareholders. Think early employees, venture capitalists, or other initial investors who want to cash out some of their stake. This happens on what are called secondary markets. These are platforms that connect buyers like you with these sellers. Typically, these platforms will pull a bunch of individual investors together into a special fund. This fund then buys a large block of shares from a seller. It's a way to get around the company's rules about having too many individual shareholders. Now, here's the biggest hurdle for most people. You can't just sign up and start buying. You usually need to be an accredited investor. This is a legal definition from the SEC, and it means you have to meet certain financial criteria. For example, you need an annual income of over $200,000 for the last 2 years, or $300,000 if you're filing jointly with a spouse. Alternatively, you could have a net worth of over $1 million, and that's not including the value of your primary home. There are also professional certifications that can qualify you, like holding a Series 7, 65, or 82 license. This rule is in place to protect investors, because this type of investing is much riskier than buying public stocks. So, assuming you meet the criteria, where do you go? There are a few major platforms out there. First, there's EquityZen. They have a relatively low minimum investment of $10,000, which makes them a great entry point for individual investors. Their platform is super user-friendly and uses that fund model I mentioned, which simplifies the whole process. Then you have Forge Global. This is for the bigger players. Their minimum investment is $100,000. They're one of the largest platforms with a huge inventory of shares from many different companies, so you'll see a lot of trading volume there. Before you get too excited and start wiring money, we need to have a serious talk about the risks. This is not like buying Apple stock that you can sell tomorrow. The first major risk is illiquidity. Once you buy these shares, you are locked in. You cannot sell them. Your money is tied up until the company has a liquidity event, which means an IPO or an acquisition. This could take years, or worse, it might never happen at all. If the company fails, your investment could go to zero. The second risk is what I call the information void. Private companies are not required to file quarterly reports like public ones. You won't get detailed financials or regular updates. You're essentially investing with limited information, relying on the company's public perception and the data provided by the platform. You have to be comfortable with that uncertainty. And finally, there's a quirky little thing called ROFR, which stands for right of first refusal. This is a clause that gives the company the right to buy back its own shares before the sale to you is finalized. Imagine you go through the whole process, agree on a price, and get ready to buy. At the very last minute, the company can step in and say, actually, we'll buy those shares instead, and your deal is cancelled. It can be incredibly frustrating, but it's a real risk you have to be aware of. So, buying pre-IPO shares is an exciting opportunity to get in early on potentially high-growth companies. But it is a high-stakes game reserved for those who can afford the risk and are prepared to have their money locked up for a long time. It requires patience, a strong stomach for uncertainty, and a clear understanding that you could lose everything. If you found this breakdown helpful, make sure to hit that like button and subscribe for more deep dives into the world of investing. Thanks for watching, and I'll see you in the next video.